Bulls can make money, bears can make money, but pigs never do. It's an old stock market adage that I've always liked, but what is it like? Wall Street is some kind of zoo or something? Well, yeah, in some ways. But recently, one of my favorite uh, bond trading, stock trading gurus used this phrase animal spirits, which you don't hear very often anymore, but it kind of highlights the difference in thinking between economists and traders, the people who are thinking long term, the people who are thinking short term. And I wanted to get into it for a little bit. Animal spirits. Well, it's a mistranslation of a Latin phrase, spiritus animalis, which was first used by John Maynard Keynes, famous economist, British economist born in the Victorian era. Very proper. Of course, he uses Latin, right? But he was trying to get at the idea of emotion, of driving force. It doesn't translate as animal spirits at all. It really means something more like motivating attitude, I guess, would be a good non poetic translation. But it was mistranslated, probably deliberately, by people who, well, don't exactly get into economics. You see, there is a big divide between the traders and the economists. Economists like to think in the long term. Uh, they look at bulk things. It's not about the short term hunter killer instinct that is so important in traders. Right? It's the trading world is full of emotion, and one of the underlying tenets of economics is that people behave rationally. It's kind of an assumption that well limits the scope of economics generally. I mean, after all, we know that people don't behave rationally, but they do in the long term. They do in bulk. They do. Okay, well, in many ways, it's just sort of simply wrong. See, I'm usually pretty good at figuring out when a company is toast or is going down or whatever. But because I have an engineering background and I'm kind of a fundamentalist about these things, as soon as I see that number, to me, they're toast. They're dead in my eyes, right? And so I'm pretty good at predicting when a company is going to go down. But I'm terrible on the timing. I mean, these things take years to go out. So if I was going to be a trader or whatever, being wrong on the timing is the same as just plain being wrong. And that's my problem. Okay? And this is true for a whole lot of different things. The short term and the long term are very different. And Wall Street, in particular, the big markets, the big thing for stocks, for bonds, for commodities that drive our world, tend to focus very much on the short term. They're full of people who have that killer instinct. You want to go back to the animal spirits? They're the predators, you know? Uh, and it's an issue. And so when economists talk about this sort of thing, well, they neglect it. Okay, it's just, well, how do we describe the spiritus animalis? Yeah, that animal instinct, right? Okay. It's not what it's really about, but it's how it gets translated. Now, I have a confession to make here. A little while ago, I did a short video on gambling with stocks. And part of the idea was to see what kind of controversy would be generated. I mean, after all, we all know that there was a huge crash in March and April in the stock market. Now, for a V-shaped recovery, you typically see in the short term a 50 to 60% recovery in the S&P 500, and that signals that you're in the recovery phase. We've recovered about 82% of the value as of today. All right. It's really crazy. Very, very sharp fee like we've never seen before. Now, we all know it's driven by the Federal Reserve buying corporate debt and pledging to support everything. But you're a bond trader. You're there to serve the people who invested their money with you. All right. You don't fight the Fed. It's really that simple. So everybody's going along with it. But we also have all of these day traders who've kind of come along, right? And everybody gets kind of excited about it. See, the real definition of a bubble isn't something mathematical. It isn't something that you can really measure and say, oh, we've come back 80%, whatever. No, no, no. The real definition of bubble territory is when the chatter becomes extreme and you have the fundamentalists like me saying it's got to go down, the people, the momentum traders saying it's got to keep moving. Yeah, the stock market is always up in the long term, you make the killing, whatever. And I was kind of hoping to see that when I made my own little video. But I learned two things. First of all, I'm nowhere near big enough to get that kind of reaction. And second of all, a lot of the people who are viewing, I appreciate your support, have been with me. And I was blogging on Baratari is the name of my blog since 2007. And a lot of you came over with that. And I know that you're basically physically conservative, if socially liberal, just like me. Surprise. Um, and so when I say, well, the stock market's just gambling, many of you just went, yeah, all right. So bad crowd. Don't want to preach to the choir too much. But what's important here is that there is this tremendous divide between how we analyze the economy in a quiet, long-term kind of thing and the realities of the day-to-day going. It's really all about that emotion, those animal spirits. It's the difference between yin and yang, the difference between hunting and gathering. It's the difference between, well, just getting by on a daily basis and really making plans. Economists simply speak a different language. Now, they don't use Latin much anymore, but they do use a heck of a lot of calculus, and I can guarantee you that the traders just bleep right over that, okay? Nobody cares about that part. But it's an important part of the effort to make the dismal science less dismal and more science. It's something economists really want to do. There is a tremendous disconnect. And even within the world of high finance, people very much talk past each other. I mean, how important is emotion? Do people really react on a rational basis and make rational choices about things? No, they don't. Over the very long term, they do, but as the same John Maynard Keynes once said, in the long run, we're all dead. So, what does it all mean? Well, we have the animal spirits. Right now, there are people kind of fighting it out one way or the other. This goes back to the deflation inflation argument. Fundamentalists like me tend to be more deflation. We are killing money as we know it, or we need to at least contemplate what debt based money as we know it would look like in a world where it's just we've outgrown it. We need to think about that as a concept. In the meantime, the Federal Reserve is pumping away money. Hey, who cares? There's free money. You grab it. It's that simple. So, what do we mean by animal spirits? Well, we really mean motivating attitude. And there's always somebody who's go-go, who wants to make a killing, who wants to be there and fight it out. And then there is the rest of the world that just needs to deal with it. I mean, we like to think that everybody in the United States, for example, can put all of their retirement money into a 401k and it's just going to go along. They're going to have a nice passive income when it's time to retire. Everything is quiet and understandable. It's a replacement for that old 1950s attitude of a company that takes care of you from womb to tomb. You know, you grow up and they just take care of everything for you. We don't have that anymore, but we have the stock market or markets in general that are supposed to do that. Well, that's not what they focus on. Okay? They're just not about that. It's not that kind of party. So, where do we go with everything? That's my big concern. It's not that animal spirits exist. Of course, there's emotion, and we need to take that into account. Sometime I'm going to have to talk about game theory and economics and where that's going. The work of people like Graciela Cicliniski, one of my favorite economists. But in the short term, well, we have the short term. And right now, in the middle of the pandemic fueled recession, depression, whatever it's going to wind up being, we don't know where things are going. And we can read the various signs, but I guarantee you that all of the noise and churn that's going on right now isn't really informing us about the long term future. It's about that killer instinct. It's about, well, what really appears to be a bubble because people are at each other's throats. The discussion level has gone way up. The emotions are running high. That's really the definition of a bubble. Fudgy, messy, yes. Don't like it. Don't like it one bit. But we are in frothier territory than we were back in January when, believe it or not, if you remember, the S&P 500 was hitting new highs in January. All right. Animal spirits are indeed running everything when it comes to trading, etc. That market that we all have to kind of respond to runs on an emotion and a killer instinct that many of us just don't plug into. And we really can't. Even if we sit down and we think about it and we plan for the long term as we should, have a great portfolio that starts with insurance and savings and all of the things that are important, feeding that into the zoo isn't really helping us. To me, that's the real problem. Yes, I'm a fundamentalist, okay? I believe in the fundamental numbers, but we always have those animal spirits to deal with. What are we going to do about it? Should we do anything? Hey, if you believe in market forces, this is what the market's all about. We have to work our way through it somehow and connect those two dots. That disconnect, to me, is a huge problem.